Good afternoon. Welcome to the Knowing is Growing series of DBS Bank. DBS Bank is a nation bank headquartered in Singapore, operating out of 17 countries across 250 locations. It operates in the large corporates, the mid-market, the SME, the consumer banking, and the entire gamut of financial services. This series is aimed at the SME clients of DBS and SMEs at large, and is aimed to bring Asian insights, knowledge, technology, and others in order to help the SMEs grow. Growth is actually a function of knowledge, and there are various topics which we have covered under this series to provide a wider perspective. Today, I'm very lucky to have Mr. Shankar Jadhav, who's the head of strategy for BSC, and he has been holding a number of hats. He's been holding the hats on communication, on legal and compliance. In fact, anything and everything which would help him answer your queries today. What he brings to us is a lot of experience, and I am very hopeful that today the kind of discussion we would have, the kind of questions we would see, and the responses would help us get a much better insight on the topic on hand. Which brings me to the topic. The topic today is know how to go public on the SME Exchange. While we are been discussing on various things around debt, around private equity, around public equity, really today we are going in at one end of the spectrum on public raising of funds from public sources. We are not ignoring it, but for today's discussion, we will try and focus away from that. There are a number of questions which I have, and I'll start with a few of them. But before I do that, I would just like to remind the format of the session. We would have a discussion for about 35 to 40 minutes, wherein we would cover some of the topics. Given that this topic is very vast, I'm sure there will be many other areas where you would have doubts, queries, or things you would want Mr. Jadhav to clarify on. And therefore, in the last 20 minutes, we will be covering those questions so that we have a complete understanding on the subject at the end of this session. To begin with, the first question which I have for Mr. Jadhav is really, as I said, there is a spectrum. On this spectrum, there is an element of public raising of funds from public sources. So do you think that for the SMEs at large, this would be an interesting topic, or this is a topic which is relevant for them?
Actually, SMEs are always in want of funds, and I believe that the SME listing, to understand it, is very imperative for any SME that wants to grow.
So let me come back to a question before that, actually. Is in terms of, we said that we would discuss on the equity side of things. So on the equity side of things, do you believe that or how would you differentiate in private equity, public equity, and what is relevant between the two?
In SME or any company, the promoters who may hold majority shareholding or less than majority shareholding are considered people who run the company. Especially in the case of SMEs, the shareholding of the promoters is very high and they control everything. They would have professional management, but at a much lesser extent than in large companies. So private equity, as well as listing, as well as promoter holding and minority shareholding or public shareholding, is important to SMEs.
Right. So if I move onto the topic, so I also understand, and from an SME standpoint, that there are SME exchanges. One has been familiar, one has been with the broad BSC and NSC and the stock exchanges. But an SME exchange, where is the place of this SME exchange?
Actually, the main role of any exchange anywhere in the world is capital formation. Capital formation that aids in the growth of the country as well as growth in employment, because both these things are very important for the country. So an exchange is a place where you trade, but also a place where you form capital. So over the last few years or decades, if you see that the markets in India, the capital markets in India, the IPOs have come, but the number of IPOs that have come or the amount generated through IPOs have gone down. To take this up, SEBI, the regulator, and the Ministry of Finance, they realized that there is need for more companies to come up. All large companies were at one time small companies. So they realized this and they passed a regulation in 2012 that we should start SME Exchange. The exchange was started in 2012 in BSE. As you must be all aware, BSE is Asia's oldest exchange. It is the world's largest exchange in terms of number of companies. It is India's largest exchange in terms of market capitalization. And also, it has more than 90% market share in SME listing. So the SME listing started since 2012, and yesterday we reached on Saturday we reached Friday we reached a market capitalization of 10,000 crores.
Wow.
And that's a really big achievement. And we've got 82 companies listed as of now. And to give you a little understanding of how the market has performed, the SME IPO index, which was in December 2012, started at 100, is more than 1,200 today.
So that's a 12-time growth already.
If you had invested 100 rupees then in a SME IPO, you would have got 1,200 rupees now.
So clearly that shows there's an appetite. That clearly shows that that's an area which could answer some of the funding needs of the SMEs. So in terms of what was some of the thought behind in terms of putting together an SME exchange, and why make it distinct from a larger exchange?
When SEBI and when the exchanges looked at various ways in which SMEs could get listed or they could come on board like the large companies, they realized that there were some concerns that the SMEs had. To address those concerns, for instance, one of the concerns is we are not a large company. If we dilute our shareholding, then we will lose control. So SEBI has a rule which says only 25% has to be divested. Also, for SMEs, there are lots of conditions which they found difficult. For instance, you have to send account statements to every shareholder in a listed company. So SEBI had relaxed some rules in that, some guidelines. For instance, instead of giving a quarterly statement, you can give a 6-monthly statement. That also can be an abridged form, and it need not be going in physical form. It can go either in soft copy or you can put it on the website. So that's a large savings for the SMEs. At the same time, they follow almost all the rules of listed companies. So they are like listed companies with a little concession.
So basically, it's customized to the SME's size and capabilities, so that it doesn't become so onerous. So what is an eligibility criteria for the SMEs to actually list on the exchange?
Actually, the SMEs in India, many definitions are available. So as far as listing is concerned, there is a simple definition that as long as your total net worth, post equity paid up capital, post listing paid up capital is more than 1 crore and less than 10 crore, you qualify to be listed on SME. If your paid up capital goes from 10 to 25, anywhere in between, you could list either on SME or you could list on the main platform. And about 25 crores paid up capital, you have to list on the main board. This is the basic criteria of how you can get your SME listed. There are many other small conditions, like for instance, you should have a net assets of 1 crore. You should have distributable profits in last 2 years out of 3 years, as per section 205 of Companies Act. But if you don't have, you are not ineligible per se, but you have to have a net worth of 3 crores and the net assets of 3 crores. So these are small conditions that most of the SMEs who want to list and grow can easily meet. And if they can't meet now, they will have to grow to meet those conditions to get listed.
Right. So in terms of, so that gives a good overview. And of course, for the details, I'm sure the details are available. Maybe what I can ask you is, in terms of assuming that a company is able to list on the SME exchange, how much money potentially can they raise? Is there a limit? Is there a size to which an SME can raise money on the exchange?
There is no limit as such. The only limit is that your post-issue paid-up capital should be more than 1 crore. And that is a limit on the minimum floor. You can raise as much as you want as long as it fits within the criteria of an SME.
Fair enough. So therefore, what Mr. Jadhav is telling us, and I'm sure many of you would be aware, that this is an option where, depending on the business model, depending on the size and scale, depending on the interest generated, this can fund a large portion of your growth, especially in a time when equity funding is critically needed.
Actually, to take this to make you understand a little better, imagine a scenario. An SME is promoted by a person and he takes out of his own funds. As he grows, he takes fund money from his family, friends. As he grows, he takes money from the bank. But there's a certain limit because he has to maintain debt equity ratio. The banks require collateral. So that's all collateral based funding. So at some point of time, when the growth starts growing, the company starts growing, the promoter is in need of funds. Without those funds, he cannot grow. To take care of this limit, SEBI has realized, and that's why they promoted this concept of SME listing. If you get listed on SME, your equity grows up. So you are qualified for more and more debt from the bank. At the same time, you are listed, so your company is seen everywhere. Your company is researched. People understand your company. So when there really comes a time when you migrate to the main board, your company is ready. It understands the principles, it understands the rules and regulations of a listed company, and everyone will know, all the people will know that the data is public. They understand the company, the way it functions, and it is a big boost to get listed on the main exchange.
Right. Let me ask the other end of the spectrum. Are there, I'm sure there are certain restrictions or limitations on a company once it gets listed. For our SME audience, what are the top few items in your mind which a company once post listing they should be aware of and they should be adhering to?
In fact, I would suggest that most of the audience listeners and who are interested in the SME platform should actually go to our site bscsme.com. We have posted some videos of some of the entrepreneurs who got listed with us. Once you get listed, you start feeling a little lighter because you are more transparent. People know about you. You also feel, even though people know about you, they are more interested in your company. You get better orders. So more than conditions, actually you are free. You have to disclose, the disclosure requirements are adequate, and at the same time they are not worrisome at all. I have seen entrepreneurs who were earlier worried about they have to disclose so much details, later on coming and saying this is a normal thing, we do not have to disclose really so much. And it's a good feeling that they've seen the company is known to everyone who looks at an exchange in the listed companies. In fact, there's a requirement that research reports are published by analysts. So you will find that all the small companies that are listed with us, the SME companies, their research reports are also available on the BSE India website.
So in terms of if a company decides that public listing on the SME exchange is the way forward, then who could help them in listing? Are there merchant bankers? Because the process is very well streamlined and known for the larger corporates. But are there people or specialists who could help in listing?
Uh, you all must be aware that whenever you got to get listed on an exchange, the first person you go to is the exchange itself to understand what the process is, etc. And the second person that you have to go who will help you in executing the whole process is the merchant banker. You can go to the SEBI website. There's a list of registered merchant bankers who can handle SME listing. You can go to BSE India website and you have a list over there. You select any one of them because when they do the SEBI registration and the BSE India registration, they have to fulfill various criteria. So they are very adept. They can help you in listing. At the same time, I would suggest that all the entrepreneurs who are interested in listing, they should go to our website and understand the rules and regulations. Because unlike the main board, for instance, the merchant banker in a small SME listing has to also undertake the underwriting of the issue, which means that an IPO in the main board, the merchant banker has to advertise and ensure that the investors invest in it. If there is a shortfall of investment, the issue may fail. But in an SME listing, the merchant banker has to underwrite the full issue. In fact, 15% on his own books. So that means once your company is approved for SME listing, then there is no failure of the IPO. It is as good as listed. It's only the procedure that you have to complete. But remember, this comes along with one more responsibility on the merchant banker. The merchant banker has to provide 3 years compulsory market making. Those of you understand market making, it's simpler to understand. But let me just clarify for those who don't. Market making means that in this case, in the SME listing, for counting all days, working days of the exchange, for 75% of the time, the merchant banker has to give two-way quotes within a band so that the bid price and the ask price are near each other, which means that there is adequate liquidity guaranteed by the merchant banker as a market maker on SME listing.
Right. So there, what I'm hearing is that help is available. It's a question of finding the right merchant banker with whom you can have a conversation. Of course, you need to go to the exchange and understand that the what is required. And with the help of merchant banker, the process may not be as difficult as it may sound. So, just taking this discussion a little forward, for an IPO, for an SME listing, what are some of the due diligence which an SME should be doing?
I'll give you a broad pathway that we can take. Once an SME looks at the various criteria required to list it and they feel that they should go for listing, they would have to check whether they're eligible for it. The checking can be done self checking by looking at the criteria, and you can go further, talk to the exchange. You can come to BSE India website. We have got an SME head, SME Exchange head. You can talk to the team there with him, and you can also take help of the merchant banker. The merchant banker has the primary responsibility of supporting the company throughout the process. Once the merchant banker and the exchange feel that yes, this company can list, it fits all the eligibility criteria, the promoter is ready, then they follow the procedure. The first part of the procedure is you have to make something called a DRHP, that is called a draft red herring prospectus, which talks about what is the industry the company is in, how the company is run, what is the market share of the company in that particular industry, what is it expected to do, what has it done in past, etc., etc. So this DRHP is filed with the exchange. This DRHP is examined by the exchange officials along with the merchant banker. If there's any shortcoming, if something is not disclosed, it's asked to be disclosed. And once the DRHP is approved by the listing advisory committee in the exchanges, then it goes for the approval of the listing. And once the listing is approved, then there is a date fixed on which the listing is done and the shares are allotted to the people. This in broad is a simple process. Of course, it has lots more small nuances, like you have to file various documents with the DRHP, which the merchant bank will have. They are standard documents like 3 years audited balance sheets, etc. So the merchant banker is fully equipped to handle this.
So, if there is a set path, so if one is able to work on that path, take the help, then it may not be as difficult. Yes, it requires some steps to be done. It's imperative. After all, we're taking public money, but it is not so difficult. And that's what Mr. Jadhav explained a little while earlier. It is simplified, customized to an SME's need, SME's capability, so that it remains simple yet effective tool for the SMEs to raise money.
Right. I can give an example. For instance, in the main listing, you require minimum 500 public shareholders, whereas in case of SME, you require a minimum 50. Those 50 also, when you are an unknown company trying to list on an SME, you might think it is difficult to find, because how will people know about your company? Would I have to do so much marketing? But let me tell you, if you are an SME in the growth phase, there will be your vendors, there will be your friends, there will be lots of people who are near you, who know you, who will be interested in your company. And many of them would have helped you in running your company by providing you loans or providing you support, etc. They would surely like to take part in your progress. At the same time, the risk on them is minimized. Let me give you an example. Suppose a friend loans you some money, and if your company does well, obviously you'll return him the money along with some interest that you think is required to be given or which is reasonable. But just imagine if you had invested in your shares and your company does well, he will not only get the multifold benefits or whatever increase in the value of your company, at the same time his risk is capped. If he had given you a loan and your company did not do well, you might be unable to pay him the full amount maybe. Whereas when he's invested in your shares, he could take out his money at any time when he feels that the company is not likely to do any harm, likely to do better, and he may get his funds, or he may require the funds even though your company is doing better. So your relationship with your friends, your shareholders is not disturbed. At the same time, the company can get the funds that they require.
That how expensive is it? One of the questions SMEs would always ask: how much would it cost? And can I afford it? How would you answer to such a question?
I think Amitabh has spoken for all SME entrepreneurs. Every SME entrepreneur that I have met, the first question after understanding how simple it is and how better it is for him to list, the first question he asks is what is the cost? In the main IPO, people have talked about crores and crores and crores of rupees, depending on the size of the issue and the way you market it, etc. And the merchant banker has to ensure that the issue does not fail and it succeeds within the price limits that they have set. In an SME, you really don't have to advertise so much because you require only 50 investors. You don't require large number of investors. Many of those investors will be nearby you, who will know you, who will be your vendors, suppliers, customers, your family, friends, etc. So you really don't have to advertise. So the advertising costs have gone down. So most of the costs will go down. You don't have to give a DRHP to everyone in physical format, etc. So the cost will be all lower than the main IPO listing, main board IPO listing. There is only one cost that might be a little more than the main board IPO listing, and that is the merchant banker's cost. Because in this case, the merchant banker has to provide you 3 years compulsory market making. So for the underwriting costs, he will charge you. But those charge also minimal, and you can actually talk to some of the companies and the promoters who are listed on SME Exchange to get better information about this. Many of them are very approachable. They have realized that they are benefited by listing, and they are ready to help their friends like you who might be interested in listing.
So the answer is that it would cost you, but the benefit would is likely to be far greater than the cost, and that cost will be much lower than a regular listing would be.
You talked about benefits. I don't think you asked me a question on benefits, and that is what everyone will be thinking about. So let me talk about the benefits. There are many benefits to listing. One of them is very simple to understand. You own 100% of your company, and you run it like your company. There is no one to check. You might make mistakes, you might fail because no one was there to ask you questions or answer your questions. When you list, you are giving 25% to the public. You still run the company because you own the company 75%. But there are people who are shareholders, who are your partners. They will ask you questions, they will keep you on your toes, they will give you suggestions. That's one benefit that you get, which no other person can give you except for a shareholder because he's put his money where his mouth is. Second thing is, when you are unlisted, whenever you do a transfer of your shares, there is a capital gains tax applicable. For a listed company, after 1 year, the transfer is not eligible for capital gains tax, which means you can transfer the shares without paying any tax because you are a listed company. Now, imagine a scenario where an entrepreneur wants to give some part of his shareholding to his children, to his friends or family, etc., and it's a listed company. He can give the shares, and after 1 year, the tax will be capital gains tax will be zero. Whereas in if you are not listed, then you would have to pay capital gains tax.
Right. So, so from a benefit standpoint, the benefits are many, and I understand, and I think you're right. Logically, the question would have come, should have come earlier, but really, so if I try and address in a nutshell, there is a benefit which is large, there is a cost which is justifiable, and when you do the equation, the cost is actually much lower than a regular listing. The cost is customized for an SME, and the benefit is amplified for an SME because the access to such funds is typically not available. So it's for each one of you to do your maths, and I think it is worth going down and understanding if you're looking at to put in equity and use this as a source to figure out if it fits your need. At the end of the day, it's your need. It's a tool to help you grow faster. And that is what Knowing is Growing series is all about. The opportunities, what is available to use. Which brings me to a slightly different question. A question, can you list without an IPO? Is that something which is possible?
I'll give the answer, Amitabh. But before that, let me tell you, I always thought that Amitabh would be more interested in asking more and more benefits, and I would never stop. It seems that he feels that this is the number of benefits and so on. You just imagine you want to do an IPO in a main board. Imagine the costs, imagine the tension you go through, whether they will people get fully subscribe the issue and whether the price is right. When you are an SME listed company, after your net capital goes above 10 crores, you are eligible to go into the main board. You can be listed on the main board without a further IPO or without further doing anything, except for taking the shareholders' approval. That's a big benefit. You are already listed, you're going on the main board, you already proven your track record.
Right.
So it's basically a platform from which you can just jump. In fact, many people have been talking to us saying, "Okay, why don't you call it a growth platform for SMEs? Why do you call it only SME listing platform or SME exchange?" And there are many such benefits. I hope Amitabh asks me every minute another question and I can give you more benefits. At the same time, remember, no benefit is without a cost, and that cost has to be understood in a proper manner.
And cost, as you rightly pointed out, cost is not only the monetary cost. I don't think we should restrict ourselves. There's a cost of compliance. There's a cost of spending time understanding the getting the financial discipline, the disclosures. They are very important because unless you do that, how do you make yourself scalable? How do you make yourself compete for the future? How do you make yourself relevant in the market? Otherwise, you run the risk of being a niche player, a player in your own domain. So really, this provides a platform of growth, platform to move from the small league to the medium league, to the large league, to the main board, as he uses using his own jargon. And I think that's important. So really, what he's saying is that it is possible to use some of these means to move or to get into these sources of funding. Since he said that I would want me to ask him questions on benefit, what I will ask or what I will do is in terms of, let me take an example. And let me take an example of a typical SME. An SME in, say, a chemical segment. And so, do you have examples of SMEs in the chemical segment who have taken? Which means that is it sectors where this is use relevant, or is it? Do you see a pattern, or do you see a spread across segments?
One of the criteria, or one of the characteristics of an SME company or a group is that they're very well diversified. Means there's no sector or single thing that they look at, which becomes actually a constraint for the banks to understand these companies in various sectors and provide them adequate funding. Whereas in a SME listing platform, you have a choice in whichever sector you are in, and it is well represented. If you look at the 82 companies that are already listed on BSE SME, you will find that there are companies from food, textiles, health, financials. There are lots of sectors that are there. So you can be in any sector. The only criterion is you should be able to meet the eligibility criteria and you should have the hunger for growth. Because if you want to grow, the SMEs, the only thing that they are constrained with is money. Because today entrepreneurs can see the world, they are well connected. Just to give an example of the importance of SME sector in India, I think all of you must be knowing that SMEs contribute to more than 40% of India's exports. They employ maybe around 8 to 10 crores of people, and there are around 4.5 crore companies in SME sector. Not all of them will grow, obviously. The SMEs group as a whole is a little risky in terms of the number of companies that will succeed is small as percentage of the total number of SMEs. There will be some who are bound to fail, and this you have to keep in mind. The companies that are listed are very likely to grow as compared to fail, as compared to a total universe of SMEs. So when you get listed, people look at you with a different eye, saying this is a company which has got higher chances of success as compared to an unlisted company. So my advice would be that you look at the criteria, look at how you can get listed. And there's a question that Amitabh asked, can you list without an IPO? There are benefits of listing. So there were SMEs who were asking questions. I do not want to give my equity to public. I do not want to dilute my shareholding with the public, but I still want to list and I want to give my shareholding to a non-promoter group for institutions. So SEBI had come out with a circular in October 2013 for something called an institutional trading platform, ITP. In ITP, you can list your company without going through an IPO or giving your shares to the public. It is mainly for meant for institutions, and you can be listed. You can get the capital gains tax benefit when institutions are bought into it. You are listed, so you have lots of disclosure norms, so it helps you. But please remember, when you're listed in ITP and you want to go again to the main board listing, you have to actually delist and then come back over here. So that's the thing that you should keep in mind.
Sure. So, so moving on, in terms of a timeline, how long does the listing process typically take?
Actually, there is a process by which, when you apply with the DRHP, our listing advisory committee meets, the persons visit the company site and see really, our BSE exchange people go and see the place. They verify whether what the DRHP states and what is there on ground is matching. We do the due diligence. It takes, once the DRHP is there, it takes a couple of months or so, and not much. To make the DRHP, the merchant banker sometimes can take 1 month if he knows the sector, or even less. So overall, the process should not take much longer.
Right. So it's not a very long process. So if you know your business, and that we have been discussing over and over again in some of the previous editions as well, that the SME business, you should have clarity of what you are trying to do, what is your market, what is your competition. You have a business plan. You have an idea of how you would leapfrog competition, and then once you start getting the growth, you come here. Then it needn't take too long because you already have the clarity of thought, and therefore some of the compliances, some of the disclosures which have been talked of here, the earlier you start practicing, the easier it makes, helps you in the growth path.
Actually, you pointed out saying that there's compliance cost. Compliance, if you look at it as costs, then you are unlikely to succeed in life. I have always believed that you should always welcome the critic. The critic is your best friend. If he tells you that you are doing something right or wrong, that person helps you learn. So we welcome our critics, we welcome our customers giving us feedback, and we try to improve ourselves all the time, which is why we have been in existence for over 140 years. And worldwide, if you see today, we are technologically one of the most advanced exchanges. In fact, we are India's most technologically advanced exchange. We are the fastest exchange with 200 microseconds. All this is only possible by listening to you. You as in my shareholders, you as in my investors, you as in public, you as in entrepreneurs who are getting listed. So as an SME listed company, you should also welcome compliance is not a cost. Actually, it's a free learning because your research, your company's details are available on the website. People can see it. People can give you advice. Maybe you can get more customers through it. So compliance is actually a boon to you. It is a free marketing available to you.
So that brings me, before I get into what an SME should do, I have a few more couple of questions there. But you touched on that it is one of the fastest growing exchanges as we see. Which are the other key exchanges in the country, and how would you compare or contrast, not from a sales perspective, but from an investor or SME perspective, as to what should he look out for when he's looking at an exchange? Because that space, the NSE exchanges, so what should he or her look at?
As Amitabh said, I should not talk about competition, but let me give you a background. India had more than 20, 22 exchanges. Then there's BSE and there's NSE. Many of those exchanges are not really functioning well now, and SEBI has given some criteria for an exchange to function. So there are mainly two national exchanges, of which we have been in existence for 140 years. We are India's fastest. We are Asia's oldest. We are, by market capitalization, we are India's largest. The number of companies, we are the largest in the world. We are the fourth largest in options trading. So there are various other criteria where we are in. At the same time, let me point out to you, it is not just because of these, but because of our enthusiasm. You should see the BSE team. That today in SME sector, we've got 82 companies listed. whereas the competition would have not even reached two digits. And it is, we follow the same rules. SEBI has the same prescribed rules to everyone. We also realize as BSE that we are an exchange which is supposed to, which have our main duty is to support the government. Our main duty is to increase the economic development of the country. So capital formation is a key goal. And SME listing also helps in capital formation. No wonder that we reached 10,000 crore mark, very close to when we reach 100 lakh crore mark on the main exchange. So it is a proud moment for BSE as well as the country that we have reached. Our market capitalization today is larger than the total assets under management of the banking sector. So that itself would give you an idea about how much wealth we have helped create.
No, congratulations. And I think at 82 companies, it's just the tip of the iceberg. It's just a start. And I'm sure comparing with the other exchanges as well, this is an area and opportunity for the SMEs as a whole to see that could they participate, could they get into this segment and see and make the best use of it to help their own wealth creation and more importantly serve their customers a lot better with the capital at their disposal. What I would ask a couple of questions. I am cognizant that we are running out of time, and I can see a host of questions which have already come up for us to review. As for an SME, would they need to do things differently on the marketing side, on the governance or the structure of the SME's management, if they start thinking listing on a SME exchange? What are your thoughts around that?
Many SMEs, they come to us and they put forward various questions. So one of the questions that we put is very clear. If you are doing things by the rules, you don't have to do anything different. Many times because you're an SME and the difference between a proprietor and the promoter is very little, they tend to take decisions in a haphazard manner. Maybe they also get funds in cash from friends, etc., and they invest, and they do not put the proper documentation in place. Those things you have to change. You have to follow the rules. You have to put proper documentation, and it's not a big task. It's just discipline, and this is the discipline which will help you professionalize and grow. Because when you are small and not listed, you could take decisions haphazardly. You could take chances. If you make systems, the chances of failure are lessened. So that is one thing that you require to do. And second, you require to be very conscious of the fact that now you are known world over as you are listed. So you have to ensure that you put out the information that is required by the public, the shareholders, in appropriate manner.
So if I look at it, and what we have been trying to cover through the Knowing is Growing series is that how would an SME customer benefit from many things? An entity or a bank like DBS has also been being at the cutting edge to see, could we look at innovation? Could we look at new solutions? Could we look at technology? But when I look at it, ultimately, one of the biggest constraints facing an SME is really, apart from talent, apart from getting the right connect with the suppliers and the distributors, etc., is the ability to raise capital. And while debt is often easily understood, getting equity, getting the private equity side of it, getting into the public equity side, public raising fund from public means starts getting more and more difficult. But if you have heard Mr. Jadhav today, I think what is clear, it's not so difficult. It is just about knowing about it. It's just about doing that extra bit of research. It's just about connecting with the right merchant banker. It's just about not treating compliance as a cost, but treating compliance as a friend. It is just about getting your alignment to what would be of interest to the shareholders, the new shareholders who would want to invest in your growth. Because all of this ultimately gets you the much needed funds, the much needed wealth creation which happens, which can fuel the growth of the SME. And with really a good understanding of this, what it does is prepares you to become from a SME to a mid corporate, and from a mid corporate in a smooth manner to a large corporate. And as Mr. Jadhav said a little while earlier, it's really about transitioning to the main board in a simple manner. So whether you call it as a growth platform is actually what this platform, in whichever name you call it, but it is something which is an opportunity. So, Mr. Jadhav, if with your permission, I think we should be looking at answering a lot of the other questions which have come in. So what I'll try and do, we have a set of questions here on the panel, which have come in by our viewers. We could go question by question, and we could look at how we try and address that. I'll start with the first question. And what are the criteria for direct and new listing?
I assume that he's talking about SME listing.
I
And a
We can
direct
make the
and,
assumption.
and direct and new listing means the same thing. And the criteria that I told you, you should not be a BIFR listed company, or if you are BIFR, you should come out. Your post-issue paid up capital should be at least 1 crore.
Right.
So those are simple criteria that are there.
Right. Right. So it's simple. It's something which you need to do a bit of research. It's available on the websites. It is some of the basics which we have discussed through the call today. The second question which I have: what are the guidelines for book building?
It's the same in case of book building in any normal course. Basically, you have an issue which has to be filled up. Let me tell you, in SME, because SEBI feels that the risk on a smaller company is more than on a large company, the market lot, the size that you can deal in, trade in, is minimum rupees 1 lakh. Unlike, you can go and buy one share of any other large listed company. In SME, you have to buy minimum shares of 1 lakh. So that is a small difference between the SME exchange and the normal exchange.
Right. The next question I have is: in light of the recent policy changes, are there any forums where SMEs can register to resolve their queries relating to IPOs, listing options, and so on?
Yes, you can go to BSE SME, or you can go to BSE India website and put your queries up. You can also go to SEBI, and these are all your queries. Most of your queries will be answered. The questions are available on the website. And in case you require anything, you can always approach BSE for understanding more on it.
So again, this is a topic which is slowly but steadily finding ground. As you mentioned, there are 82 customers on BSV. I'm sure there are several other customers on NSE and other platforms. So as the knowledge base around it is increasing, some of these websites would provide you with a lot of insight, and merchant bankers would also be a very good source of giving information. So information is available. It's just about getting the right connect. And the reason why we are hosting this session today is because this session or this topic is increasingly becoming relevant to our customers. And therefore, we would want such topics to come to you at an early stage so that the audience benefits from that. So it's a topic which is worth for you to explore, and the information is available. Feel free to write back to us as well if you need any other information. Next question I have is: investors in India are always concerned about the liquidity in small stocks. Does that make the possibility of raising funds to exchanges more challenging?
This concern has been known for a long time, and which is the reason the SME Exchange or SME platform is one of the best ways to resolve it. As I said earlier, for 3 years there's compulsory market making, and due to the market making, you always have liquidity in these stocks. You can go even now to look at the BSE SME, and you will see that the stocks are traded there. The quotes are available. So if you want to sell or buy those stocks, it is always available because of compulsory market making. So the constraint of not having liquidity is eased considerably. There's no such problem in the SME listing side as of now.
Right. So because of these 3 years criteria, and by that time, the assumption is that the SME would have grown large enough to have a market of its own. So in that sense, the liquidity constraint or the lot sizes is really something which is proactively addressed, and some of these may not become too big an issue. Okay. The next question which I have is: what are the listing fees?
The listing fees are very minimal. They are in thousands for a company from BSE side. Actually, you don't even have to worry about the listing fees. What you have to worry about the merchant banker's fees, because he has to underwrite your issue, and he has to make the market available compulsorily as market making for 3 years. Other than that, I don't think the listing fees really are important. They're very meager.
Right. So don't worry about that cost, is what Mr. Jadhav says. And we shall move to the next question, which is when should you propose to list on SME?
This is a good question. Many people are unsure whether they are ready or they are not right ready. The only way to know is, do you have your paid up capital to 1 crore or not? It does not matter. The turnover or the profitability is relatively lesser important at this stage. What is important is whether you are a growing company, whether you're likely to grow, and whether you're paid up capital. The paid up capital plays a big role because it shows your intentions about investing in your company and all that. So you should always go for listing or approach for listing when you are ready for growth. When you require funds, you are exhausted or you are on the verge of talking to banks and finding that you require more funds than they can afford give you.
And of course, you would have to do your own due diligence and speak, as you mentioned earlier, to the stock exchanges, to the merchant bankers for the right timing of that. The next question as I have is, how is the government and regulatory board handling the issue of encouraging more investors to purchase stocks after they're being listed in view of the low liquidity and high risk of SMEs? So I think this is a question which is on the top of the mind of a lot of people.
As I said again, I do not know who has given some misunderstanding about low liquidity. As I said, there's compulsory market making available. You go to a SME platform of BSE, you want to buy or sell any shares on the SME listed companies, they are available. You can sell or buy. There is no constraint on it. They are considered as high risk by the regulator, that is SEBI, and hence the minimum lot size is kept above 1 lakh rupees. Because what they might be feeling is that any person who can invest 1 lakh or more in one particular script has ability to do the due diligence or get it done through some agency which is expert in that area. So the SMEs could be considered high risk, but liquidity wise on the SME platform, I can assure you that liquidity is available because of the compulsory marketing. If someone is stating to you or informing you that the liquidity is less, then it is incorrect. Also, I would like to bring out one more point over here. Many people feel that if there's a stock listed on an exchange, it should be traded. I don't know as retail investors whether someone has guided you that as a retail investor, you should buy a stock, invest in it, and keep it for some long period of time. And by long period of time, I mean it should not be seconds or minutes. I have a feeling that you're keeping on watching some of the business channels which you show you share prices by the second. And remember, we ourselves are faster. We give a response time of 200 microseconds. So we are the fastest exchange. But let me tell you, that is not meant for the retail investor. That is meant for high frequency people who trade lot, who are more in derivatives. They are more advanced people who understand the markets well. As retail investor, you should buy a stock and keep it with you for some time to get the growth. At the same time, you should be able to buy or sell whenever you need. So liquidity should be there. And in SME platform, we have the assured liquidity and you can invest, which is why you will see that where people have invested in some of the shares, those shares are not traded so often. So by not seeing the trades often, you should actually realize that though the market is liquid, there is a market maker always available to buy or sell shares. If the people are not selling, which means that people feel that the stock is safe and secure and they want to remain invested in it. So that is the reason why you might be seeing that people don't want to sell. But if you want to buy, it's available. And even if you want to sell, the market maker is also available. In case someone else also wants to buy from you, you can sell it also.
Right. The next question I have is, how can SMEs deal with the infrastructure, technology, legal, and regulatory requirements of exchange listing in the absence of adequate resources?
If you talk to your merchant banker, you will realize that there's a standard listing agreement that we have. That standard listing agreement is simple to understand. You can go through it. The regulator also has seen the standard listing agreement, and you can talk to entrepreneurs who have signed it. It is not as you say, okay, there is infrastructure, technology, legal, regulatory requirements that you require for adequate resources for signing that agreement. It's a simple agreement. I do not know whether you know that you sign so many agreements daily. When you go by a train, you buy a train ticket, there's an agreement between you and the train company or the train government that I am going to travel and I'm paying you so much for these services. So this listing agreement is, yes, it's an agreement. It's got certain clauses and all. Your merchant banker understands. He can explain it to you. We can explain it to you. It's not really a big issue, and it's a standard agreement. It's not something made specifically to trouble you or disturb you or take any advantage.
No, I think there's some amount of resources which you would need to put in if you're thinking of listing. But that's something which is what you are planning to do, and that's what gives you the edge. And you would need to invest from a growth standpoint. But it's not something which is unduly. And that's what some of the discussion we had initially. It was in terms of that it is customized for SME. Some of the more onerous parts which are available for the larger corporates have actually been simplified so that SMEs can take advantage of that. So it is there is certain minimum requirement, else the benefit of listing, else the due diligence of listing would be lost. So it is a platform, it's a growth platform, yet simplified and customized for SME. The next question I have is, what is an institutional trading platform and is it different from the SME platform?
Yes, institutional trading platform is different from the SME platform. In an SME platform, you list the company by giving 25% of your shares to the public. Whereas an institutional trading platform, you do not have the IPO, you are listed, you give some of the shares to institutions. So there's a difference between the two.
Next question I have is, how can SMEs manage the equity and risk portfolio after being listed on the exchange?
The SMEs have to manage their companies, they have to run their
Absolutely.
companies. The portfolio is not managed by SMEs, it's just a share value and that will be determined by the market.
Right. Simple thing. The fundamentals don't change. You still need to know your customers. Without that, the SMEs would not survive. You still need to know your product solutions, competition, your suppliers, your dealers. So really, the whole objective of these listing, stock exchanges, private equity, debt, is not to divert you from your main business, your core, which is to get your business, get your connect. All these are just tools to give you the adequate liquidity and funding in order to fuel and continue the growth of your business. So really, what Mr. Jadhav is saying is absolutely right. If this distracts you, then your business is at risk. This is not meant to distract you. It is something which is meant to aid you. So therefore, some of those you should leave it to the market, you should leave it to the others. Really, for you, the business remains what is important. And what the value which comes in, what is the wealth created, that's something which is of interest to you. The reports and I'm sure it would be available on sites and available on easily on your iPad or whatever you're looking at to check that on at whatever frequency you choose to.
In fact, the difference is here you voluntarily disclose your transactions, what happens in your company, as compared to when you take a bank loan or advance from a bank. They will ask you questions. They will do lots of more due diligence than what an equity shareholder might do. But at the same time, a shareholder is a shareholder. He can ask you many questions, which might be more than what a bank can do. But if you are doing your business well and you've listed and the people have invested, they surely know what they are trying to do and they'll support you with that.
I'm cognizant of the time, so last couple of questions, which we will try and do. Whereas, can the paid up capital come from international individuals or international companies?
Any person who's eligible to invest in Indian markets on the main board can invest in SME. So there is no difference between the main board and the SME platform. So international people also can invest.
Sure. My final question is, how do you migrate from the SME exchange to the main board?
When your paid up capital goes about 10 crores, between 10 to 25 crores, you can decide you want to migrate to the main board. The There is a process. The process says that you have to have an AGM in which two-thirds of the shareholders, which are non-promoters, have to vote for it, and then you can apply to the exchange to migrate on the main platform. It's as simple. You don't have to have an IPO again.
Right. So, Mr. Jadhav, from a closing standpoint, having gone through this session, having seen some of the questions which our audiences have been asking, any closing thoughts from your perspective as to going back to the topic as knowing how to go public on the SME exchange?
Very simply, I would like to state that initially when people were hesitant, people didn't know what about the SME listing, etc. Today we have 82 companies already listed. There are 6 companies waiting approval. 10 have already got approved. So that will be around 98 which will be listed in very short period of time. And there will be more coming. If you would like to grow, you have to look. You have taken the risk of starting a business and growing it, getting it to a certain level. Now it's this next step that you take, whether you want to grow your company further, whether you want professionalism into your company by getting shareholders which are non-promoter, the public shareholders, who can ask you questions, who can guide you, and whether you want to share your growth with other people so that overall the your company grows much more than what it would be without the SME listing. So I wish you all the best and hope that you will look and learn more from the BSE website or asking questions to the merchant banker or to BSE and list your companies if you can, and may God bless and wish you success.
And there you had Mr. Shankar Jadhav speaking about the SME platform, SME Exchange, and how you would list. This is part of the Knowing is Growing series of DBS Bank. And it is meant, as I started off with, providing you with insights, Asian insights on topics of relevance and of interest, which would help the SMEs take themselves to the next level. And we, as partners of growth, are committed to bring this to you. With this, we close today's edition. Thanks a lot for your time, and we look forward to seeing you again next time with a topic of your interest. Good day.
Good day. Thank you.